the challenges around the shortage of radiologists is real. We often have seen equipment that sits there fairly idle. You might have an X-ray in place, but it's just not being used at its, not even at its capacity, maybe a few hours a day, because you just don't have a radiologist, and that's a huge problem.
We ask ourselves always, how does this improve access to healthcare? How does this improve the quality of care? How does it improve the ability of companies to scale and deliver healthcare services in an efficient way so that we can really mobilize our capital to make a huge impact?
I think there's a lot that's still evolving in terms of how do we approach the regulatory approval? How do we approach the ongoing monitoring and evaluation? Because these are, the reality is these are dynamic, but the approval process is not dynamic.
Like if you have to, say, hypothetically choose between a climate tech company and a financial inclusion company and a healthcare company, right? Like, how do you even normalize the impact that they can have in order to decide, where to place, the so-called bet? Like, is there a framework, or like, how do you guys think about it?
Instituting governance and compliance and all those things that we as founders think are boring. From day one, even at the early stage, if you really want to, gain the trust of healthcare providers and a lot of the ecosystem players. So I'd say the trust and the compliance and the governance here are super critical. And also the need to make sure your models behave the way that you expect them to behave, so that there aren't sort of unintended errors and mistakes that can impact you.
Welcome to episode number 78, as I've just been told, of the Unboxing AI webinar series. We are back after almost a 7-month gap. I would say we were taking a break after 77 contiguous episodes, and it's very, very exciting for me to today have with us the team that has put their trust into CARPL, put their trust into our abilities to unbox AI. This is the International Finance Corporation. We have Mohamed, Monique, and Treasa from there. Thank you so much, guys, for joining this. This truly means the world. And hopefully over the next hour or so, we'll have some fantastic questions and deliberations. So I am gonna start by just introducing the folks on the call. And but before that, to everybody who's joined, I see a lot of friends here. Thank you for joining. To everybody who's joined, you know how it is. Questions over everything else. Please don't hesitate. Use the chat box. Use the Q&A box. WhatsApp me. Whatever, get your questions out. This is the team that controls a lot of healthcare in a lot of different parts of the world. We'll learn about that, and also non-healthcare stuff. So do not hesitate to ask questions. This will be recorded. It will go on YouTube later, and we'll have lots of fun. So without further ado, maybe I'll start with you, Mohamed. Mohamed is the global head of IFC's VC and Direct Investments Group. And as a member of the investment committee, he leads a global team of investment professionals in LATAM, Africa, Middle East, Eastern and Central Europe, and Asia, which is essentially the entire world. He holds both a bachelor's and master's degree from MIT in electrical engineering and computer science. Amazing. And an MBA from the Harvard Business School. Thank you, Mohamed, for joining. It's truly an honor.
Thanks, Vidur. And thanks for the CARPL team for organizing this and inviting all of us. We're excited to have a discussion with you guys today.
Awesome. We will hope to not disappoint. Next, we have good friend now, Monique Mrazek. Monique is the global sector lead for health tech and a senior industry specialist at IFC. She focuses on investments and innovations across digital health, diagnostics, AI-enabled healthcare, of course, and tech-enabled healthcare services, with a particular emphasis on the emerging markets, as we learn more in due course. And her work spans VC, growth equity, portfolio management, sector strategy, globally in healthcare. She has a PhD from the London School of Economics from an educational perspective. Thank you, Monique, for being here. Truly, very, very happy. We've spent so much time together, so it's amazing to have you here.
Thanks so much, Vidur. Look forward to it.
Nice. And next up we have Treasa. Treasa is, I think, the one who advocated for us at IFC. So thank you for that, Treasa. Treasa leads IFC's VC practice in South Asia, has more than 2 decades of experience in Indian PE and VC, especially in the impact investing space. Like everyone here knows Treasa, and has a strong focus on tech-led businesses that create impact at scale. Um, a lot of good stuff done by her. Yeah, there she is. Treasa is a chartered accountant and holds an MBA from the ISB, and she's a frequent speaker at a lot of forums across India, as I said. So thank you, Treasa, for being here.
Great pleasure to
and
be here, Vidur.
and for also
Thanks everyone for joining.
helping us orchestrate this as well. So, guys, fancy introductions aside, I would love for you all to take a minute or so each, and maybe we could go in reverse order now. We could start with you, Treasa, and tell us what is it that you do, as if you were telling a 5-year-old.
So, just I don't know how much folks in the room know about IFC, so maybe I'll start there. We are a development finance institution. We're part of the World Bank Group. Our mandate is to invest and use private sector solutions as to create jobs and to create impact at scale. So I lead the venture capital practice of IFC in the region. We do two things. We invest in early stage as well as early growth stage startups such as CARPL across sectors, including healthcare, climate, fintech, agri, and so on. And we also cover early stage through funds. So across the two in the region, we have managed a portfolio of over $1 billion.
Wow. No 5-year-old is understanding that. Yeah.
I was about to say.
I think Mohamed and Monique can do a better job of simplifying.
Monique, let's see what you've got.
So I often have to try to explain this to my daughter, who always is a little confused at what I do. So and even explaining the investments is hard because she gets a little confused of like, how do you do healthcare? But she tries to explain it to her friends, and they're like, "Are you a banker? Like, are you a teller? But you're a flying nurse." So I've had many descriptions over the years. But I work really closely with folks like Treasa and Mohamed as we look at investments in healthcare that are earlier stage, across different countries. And I also work really closely with our teams that do investments in more mature businesses in healthcare. And so I think where we see ourselves is, fitting into the ecosystem is making investments that, improve like access, quality, and affordability of care. Obviously, our mandate is emerging markets. And so, really we look for commercial returns, but we look to, sort of improve how people are getting access to care across these different markets. But on my end, it's really with, a tech-enabled or tech focus. So really looking at businesses that are tech first in health. They're tech-enabled businesses in health. So some of it's business model innovation, some of it's technology innovation, and supporting them as we make the initial investments, but also working closely on the portfolio side and helping those businesses to grow. How is that?
I don't know, like.
Well,
definitely better
Mohamed,
than me.
Mohamed.
Vidur, unlike Treasa and Monique, I'm going to answer your question because you said to a 5-year-old.
Yes.
So to a 5-year-old, we just treat your whatever you're suffering from, whatever is making you feel bad. We help treat that ailment. So we try to make your lives better and make you feel better if you have any sort of health problem. And we do that by making sure that when you go to a doctor, the services the doctor gives you are available, and your parents can afford to give you that healthcare. How's that?
Yeah, I agree. You give doctors money so they can take care of
Treat
us.
people.
Yeah,
Exactly.
I like it. Awesome. Awesome. So before I move on to the next thread, folks, again, feel free to ask questions. We feel very lonely if people don't ask questions, so please do that. Yeah, then of course, we've talked a lot about healthcare, and from a consumer or from a patient's side, it's very evident that it's important. But why, and maybe Mohammed, I would love your perspective on this to begin with, from the view from the top, like
Mhm.
why is healthcare so important to the World Bank and to IFC?
Yeah,
And
great
also a
question. And
little
I think
bit
this is
also a little bit about the structure of the bank and why it exists. Just that little bit of historical
sure.
context would also be useful.
Sure. So I think that you asked a very important question, which is why healthcare. So there's a very important set of reasons why we care about healthcare. We, of course, invest in many, many sectors, and healthcare is just one of those sectors. But I think healthcare is very unique in terms of its importance and role, in terms of why we do what we do. So maybe just to share a couple of important KPIs and data points that sort of guide our mission and why we feel so much conviction for the sector. One, of course, we invest in emerging markets, right? And so we were set up to invest in emerging markets to help the economies of emerging market countries grow and thrive. So if you think about healthcare within that context, so emerging markets today are basically home to 80% of the world's population. So the impact we can make in emerging markets is huge. By 2050, nearly 80% of people aged 60 and older will live in low to middle income countries. So if you think about the spread of chronic disease management, specialized care, and the need for finding solutions there, it's the greatest. That's even more acute in sub-Saharan Africa, where 25% of the global diseases are born there, but only 3% of the world's healthcare workers and less than 1% of global healthcare expenditure is found there. So that problem in Africa and sub-Saharan Africa is even more unique in terms of the gaps that we see in healthcare. Many emerging markets have fewer than one physician per 1,000 people, compared to the developed world, which is like more around 4 to 5. If you think about the availability of advanced diagnostic equipment, that's again heavily concentrated in the developed world as opposed to emerging markets. And so all of these things play into why the importance of us solving healthcare in emerging markets is so important. Lack of physicians, lack of hospitals, lack of quality care, and so on. I think what's really interesting to us and really motivating our need to sort of do more is now the opportunity that AI presents to us, right? In terms of helping us improve access to healthcare, improve quality of care, reduce the cost of healthcare, and the ability to scale businesses in a very capital efficient way to make an impact on healthcare. So within that, we sort of frame our investment thesis around three major gaps: the access gap, the quality gap, and the systems efficiency gap, as I mentioned. So we look at our investments in terms of, we ask ourselves always, how does this improve access to healthcare? How does this improve the quality of care? How does it improve the ability of companies to scale and deliver healthcare services in an efficient way so that we can really mobilize our capital to make a huge impact? And so, I'd say that, when we see the benefits of what we do in the VC space and what our colleagues in the rest of IFC, who are providing sort of debt solutions to hospital chains and clinics, and so doing more larger scale investments, we try to be very synergistic and aligned with sort of a one World Bank approach of interventions that we do for healthcare. And to your point about where does IFC fit in the World Bank, the bank really deals with policy, providing funding to governments, whereas IFC invests more in the private sector and supporting businesses that deliver those services. So, for example, Monique plays an integral role to sort of align and help us work with not just the rest of IFC, but the World Bank in terms of having one cohesive healthcare strategy that helps us sort of bring the best of the bank and IFC to emerging markets to address all the gaps that we see in healthcare. So I would say from a human perspective, this is the most important sector, which has the biggest most unmet, the biggest unmet needs that we need to solve. And that's only going to get more challenging over the next 20, 30 years, given the demographics and the population growth and where all these things are needed.
So, but Mohammed, like, and maybe Treasa, I would love your perspective here as well, because you also straddle multiple industries. Like, how do you go about choosing, you know, like if you have to say hypothetically choose between a climate tech company and a financial inclusion company and a healthcare company, right? Like, how do you even normalize the impact that they can have in order to decide, where to place, so-called bet? Like, is there a framework, or like how do you guys think about it?
Yeah, so I can, give you some perspective, from the region. I mean, in India, we work, and pretty much in every country that, we operate in, we work under a country partnership framework with the government, which we, jointly decide on for a 5-year period, which will determine, what our investing priorities in the region will be. And we've just launched the new country partnership framework for India earlier this year. It focuses on 3 or 4 outcome areas, and one of them being empowering people through better skills and health. The others being fostering rural prosperity and resilience, driving urban transformation, building resilient infrastructure, and boosting energy security, right? So these are all outcome areas that we are committed to invest in over the next 5-year period. And within that, within investing in people, of course, the major focuses on healthcare, education, skilling, and also working on active labor or developing the labor market more effectively, and reducing barriers there. So here, I mean, again, strengthening public health systems is an explicit outcome area. So that's, I mean, we will invest across all these objectives, and that's where healthcare fits in. So it's, we have specific strategies for each of these sectors. We have global specialists in each of the areas that we invest in. And, I'm really the only, generalist in the room here. We have specialists like Monique in all the other areas that we invest in, who we work closely with, as we decide what to do in the other sectors.
It's super interesting. So, like, there's almost like this kind of 5-year mandate, if I may, or like a framework that is the guiding light, and thereby, you can go back to it when you're figuring out where to make the investment. Interesting. And Monique, from your perspective, like, of course, there's digital health and there's brick and mortar health. How do you see the landscape from an impact perspective evolve? Like, of course, it's easy to say that, digital health is going to be, that exponential kicker in terms of delivering healthcare to so many people. But then at the end of the day, there's also a lot of value in like physical, hospitals and diagnostic facilities and imaging centers and clinics and all that. So how do you straddle that balance?
I mean, so maybe just sort of like taking a slight step back. So, healthcare for the bank group fits within sort of the people, the people sort of framework. So people is health, education, social protection. And there's an important jobs agenda that the bank group has as well. And so you need healthy workers, you need healthy families. So it fits into that broader priority of having healthy people working and supporting governments for that mandate. And one of our key sort of metrics as a bank group that we're targeting for healthcare is to reach 1.5 billion people with quality, affordable health services by 2030. And so we're about 1/3 of the way there. now. And as part of that strategy, there are certain priority areas for the bank group as a whole. This includes digitally enabled primary care is an important priority, workforce expansion, stronger health systems, and public-private collaboration. So that's sort of the big picture of where we all want to get to. And then within sort of our team, which is really focused more on the tech-enabled and digitally enabled, we look to make sure that our investments are fitting into helping us as a group to achieve these goals. So, the prioritization within our team around digital is really important because it does have an important reach. Like when we start looking at the metrics of reach that a number of our companies achieve in terms of reaching patients is quite impressive when you look on the digital side, because you just have that footprint of being able to reach. And that's not to say that we don't invest in bricks and mortars as an institution. We do, because that also is an important component. And there's certainly some markets where you do have really important infrastructure gaps. So we do take a look at that. But overall, we're looking, and I'd say every country, every region is a little bit different in the dynamics and how we might prioritize and try to understand, where are some of the key crucial gaps, and how do these investments help to address and deliver and improve. And can this company, let's say it's starting in one particular market, can it reach other countries in the region and start to replicate and deliver those solutions elsewhere? So those are some of the things we think about. And so I think one thing we learned over time is, the digital enablement has become more key to being able to improve that reach and that access. But also when we think about the unit economics of the business, it does help with the unit economics of the business. So these are, for us, it's really, I think, it's important that we look at those aspects. But overall, we're trying to fit into helping deliver, this 1.5 billion of improving access to affordable and quality healthcare.
That's very interesting, and 1.5 billion is not a small target. So pretty amazing. I think on that exact thread, there's a couple of questions that have come in. Maybe we could take those before we move ahead. I'll maybe take the second question first, because this is related to Monique, what you were asking. This is from someone who doesn't want to be named, although it's a great question. So they say that, across IFC's global portfolio, what have you seen distinguish tech companies that successfully expanded across markets from those that remain dependent on one geography? Of course, the question is specific to healthcare, but we're open to other examples as well.
Yeah, I mean, I think it really comes down to the business and the business model. I mean, there's certain business models that are really addressing a problem that is existing in multiple places, right? So, so, if I think of something like a CARPL, right? You're really addressing a common problem that we're seeing really across the radiology space, whether that's in the US or that's in Brazil. So I think for those companies that have that kind of business model that's really addressing a common problem, there is more opportunity for that kind of expansion across a region, across even globally. Then there's some companies that are really solving that. Maybe they're more they have more. Maybe it's more service oriented, so it's more of a hybrid model. So, and they're really, they're maybe dependent more on an insurance piece that could be relevant in that particular market. So, while expansion across that country is very probable, they might have to pivot or change the model if they want to cross the region. So there's a lot of nuances, I think, as we think of some of these businesses. But I think the most successful models are the ones that think from the beginning about how are we going to commercialize this and how do we do this with unit economics that make sense. And I think those are the ones that end up being the most successful over the long term.
Yeah, and I think it also depends on how big the one geography is, right? Like if you take something like India, right? Like there could be successful, large companies that are built just out of focusing on India, and I'm sure you would have, those. Treasa, please just start. You can just start talking.
Yeah, no, I just wanted to share the examples from the India portfolio,
Yeah.
right, of both Nephroplus,
Mm.
which took the dialysis care model to several other emerging markets, as well as Lenskart, which expanded to Southeast Asia. So yeah, I think particularly on the services side, I think the Indian market is a very complex one, and probably there's clearly an opportunity to perfect the model here. I think it's stress tested, for volume and different other kind of operating complexity. And yeah, these companies are the ones that I can think of from the India portfolio that successfully went to several other markets.
Oh, wow. So IFC is investor in both Nephroplus and Lenskart.
That's right.
Wow.
I've
Amazing.
fully exited Lenskart now, but was an early investor. Nephroplus, we were a very early investor. It's the company got listed earlier this year, but we remain an investor.
So no pressure on my team, like. So, Mohammed, would you like to add something to this?
Well, I'll just say, broadly speaking, just to add, we touches on also the India to the world. When we invest in companies in emerging markets, we certainly don't limit their ambitions and potential to just emerging markets. So, for example, in the software sector, we've invested in companies that, of course, start in India but serve global clients even from day one, right? So, and that's a common story of India to the world that we're very proud to champion. And so I think it goes back to, again, when you invest in a company, your ultimate goal is to help this company scale and succeed and to get follow-on funding and so forth. And so the execution, whether it means executing in the local market first, making sure you're profitable, proving out the business model, and then scaling, or scaling from day one. Ultimately, you have to do this in a profitable way to show that the investors that the model works, there's product market fit, the unit economics work, and then you can scale. So we want to champion these emerging market companies, whether they want to stay local or go global from day one.
No, and on that point, Mohammed, there's another question related from Gaurav Arora. Gaurav is from my team. And he's asking essentially, do you see innovators of technology emerge from emerging markets, or do you see emerging markets being later adopters of technology from a global perspective?
Our experience across emerging markets, we're seeing really amazing innovation come out of the emerging markets, and that's why we exist, right? Our business is growing because we see so many entrepreneurs now. This is a younger generation, unlike my generation, where we came out of college looking for jobs. A lot of the new generation are looking to start companies, and they're not looking to apply for jobs. They're job creators. So the startup sort of Silicon Valley culture has sort of permeated emerging markets in a big way, and so much so that we're actually seeing now really people come back from the West to go home to start companies in emerging markets. And that has led us to also expand what we do to some, in a limited strategic way, to do more tech transfer, where we would invest in, companies that are, by select basis, a small part of our portfolio, but on a select basis, invest in companies that happen to be, say, in Silicon Valley, but want to enter emerging markets. So we can help them accelerate that entry, especially for technologies that we see having a huge impact on whether it's climate, healthcare, AI, and so forth. We want to make sure we cover all the bases. But I can tell you that we're seeing amazing founders come out of emerging markets, and some who grew up in the US, where immigrants want to go back and start companies in emerging markets.
Yeah. No, I think we're seeing that as well, right? There's so many people reaching out for advice and how to do this thing in India, and so it's very, very exciting when that happens. Somebody goes to like a Stanford or MIT or Harvard or Penn or someplace, and then wants to come back and bet their entire career on building something here. So that's pretty incredible. We have a specific question. Thank you for the questions, guys. Like this is amazing. Makes my job much easier. Uh, we have a question for Monique. Uh, yeah, in a 2020 paper that you co-authored, Monique, and I might be paraphrasing, I recall you making a case that scaling healthcare AI would require trust as well as frameworks to govern and monitor algorithm performance. 6 years on, uh, where do you feel we've made most progress and what remains most underestimated? So,
Yeah. So that
or generally, like, how do you think about AI trust in healthcare, right? Like safety, governance, all that good stuff.
and I think I mean it's still very much an evolving space, right? And it's like and I think we have different regulatory regimes in place and sort of different approaches if you think of Europe versus the US, for example. Uh, and then if we think of our target markets, a lot of those regulatory frameworks either are still non-existent or they're still very nascent. So I think there's a lot that's still evolving in terms of how do we approach the regulatory approval? How do we approach the ongoing monitoring and evaluation? Because these are, the reality is these are dynamic, but the approval process is not dynamic. And so I think that's kind of the challenge of it. And I think that is going to, I think the whole governance piece is going to become more important. And I think that's where, systems like the orchestration layer you guys have built, it becomes really important. Because over time, I think there is going to be, more demand for being able to go back and ensure that actually the models are delivering what they said they were going to deliver for us. And so I think that's where those governance systems haven't really been in place in a very dynamic way. But I think over time, we will start to move there. And I think that's where some of these, having the systems in place that allow us to do that, I think will become more important.
So if I was to, kind of put that question to Mohammed and Treasa, you guys as well, since you look at non-healthcare AI as well, what are some of the differences that you observe between, folks building healthcare AI versus folks building non-healthcare AI? Like, are there differences in learnings?
Sure. I'll start and please jump in. So the first thing is healthcare is a regulated industry, right? So trust, accuracy, governance, compliance are core, right? This is not AI for content creation and social media, right? This is real world stuff where mistakes cost you. They can cost you your brand, your reputation. They can impact patient care. So I'd say the bar to do AI for healthcare is higher, right? So I think it's very important for companies that are going after this market to be built in the right way, instituting governance and compliance and all those things that we as founders think are boring. From day one, even at the early stage, if you really want to gain the trust of healthcare providers and a lot of the ecosystem players. So I'd say the trust and the compliance and the governance here are super critical. And also the need to make sure your models behave the way that you expect them to behave so that there aren't sort of unintended errors and mistakes that can impact you. In other sectors, I think the issues about AI are more about cost and scaling rather than more of this sort of regulated sort of requirements that are prevalent in healthcare, and sort of financial services are the same way, I would say.
Treasa, maybe.
Yeah, I mean, I think, AI in the context of a country like India, clearly can unlock, many use cases in agriculture, healthcare, education. But on the enterprise side, like Mohammed said, healthcare, I mean, banks and hospitals are really the, most difficult, enterprises to penetrate from an AI perspective and for the right reasons. And I think that's why, we wanted to back a company like CARPL, because the real challenge is how do we ensure that all these applications which are growing fast are also are also used to further our goals with respect to healthcare reach and access.
No, and it's incredible that you guys feel this way, and of course, your partnership with us is testament to it. But there are, there's like a certain group of investors that I sometimes come across that are almost, fatigued by the compliance and regulatory overhead, etc. And like healthcare AI, especially clinical AI, right, where you're dealing with direct patients, is almost a put off, right? That and I get it, right? At the end of the day, it's the IRR and all of that, which is a good segue to a couple of other questions that have just come in. Um, or maybe before that segue, there's this one very interesting question, Mohammed, directed to you that maybe I'll go for. It says that for Mohammed, IFC has described AI as both a generational opportunity for emerging markets and a risk of widening the digital divide. In healthcare, what will determine which of these two outcomes we see? Dude, whoever you are, why are you anonymous? Like, these are such amazing questions.
It's a great question. It's a great question. So I'm squarely, of course, as a venture capitalist on the side of it's a huge opportunity, and I think when we talk about maybe the risk of the widening of the gap is if we don't do anything, yes, it's going to
Yeah,
widen the gap. But I think that it's a leveling technology, levels the playing field.
yeah,
We're seeing, for example, amazing companies come out of Africa in healthcare. They're employing AI to solve healthcare in Africa, and these companies are scaling quite quickly, and they're expanding geographically as well. I think that if you think about the three gaps that we talked about, access, quality, and capital efficiency in terms of infrastructure, there's no doubt that AI presents a generational opportunity for healthcare because you can really make a big impact if you know how to design AI for your specific use case and create companies to do that. And you can do it now in a very capital efficient way. I think that people often sometimes get tripped over in terms of look at all the capex that's going into hyperscalers. How could we ever do that in emerging markets when there's, the capex is high, the power is not there, and so forth. But we are actually looking at that and saying that's actually an opportunity because, first of all, not every region needs an LLM on its own, right? The capex is really
yeah,
because you want to do LLMs on the cloud. But we're now investing on the edge for low cost, using AI inference and very low cost, think of it as agentic PCs, the way you can offload a lot of that usage and AI demand in a very low cost modular way. And so you can go after India, you can go after Nigeria, you can go after all these countries from day one without having to build a $50 billion data center like they do in the West. So I think there's no doubt in my mind that you can deploy AI today in healthcare and a number of other sectors in emerging markets. And yes, if we sit on our hands and do nothing, the gap is going to get wider because we know that those things are going to be deployed today in emerging markets. Just to give you an example, I've tried to sign up to schedule a meeting with my doctor, so I have my own health insurance plan. And the first point of contact is a chatbot. It's no
yeah,
longer a person, right? So boom, boom. But it's actually so much advanced now where it scheduled everything for me. It pulled up my records. It sent it scheduled an appointment. It sent my prescription to the local pharmacy without having talked to anybody on the line, a live agent, right? So it's already happening in the West. And I think the opportunity in emerging market is in a disruptive way, really try to make a big impact across all these gaps that we talked about.
Monique.
Yeah, I'm just going to add to that. Like I fully agree with Mohamed, and I think also it's not without acknowledging that there aren't some like hardware and software gaps that still need to be filled in especially in certain geographies and in certain segments, especially peri-urban rural areas and in some markets. So I know that like, as a bank group, we're also working very closely across with our infrastructure team, for example, looking at building out sort of connectivity, building out data centers, solutions that also address sort of that allow us to then build on top of that to to ensure that there's an EHR, there's an interoperability system, and so what's interesting, I think, in a lot of the markets, I think on a consumer basis, the consumer is often ahead of the government in terms of technology. So you have, most people are carrying one or two smartphones, and they're already receiving and doing some of their healthcare themselves. But the government, the public systems are often behind, and they don't have the hardware and software systems that are caught up. And so I think that's where we're trying to focus now, especially, as I was mentioning, pre-call, we're working really closely as an institution across the public and private sector. We have a much more closer alignment. And I think, when we talk about sort of digital primary care, it's really looking at that, right? It's really trying to make sure all those building blocks are in place so you can actually deliver that in a different way.
Yeah, no, that's very well said, I'd say. Questions are pouring in, which is amazing. Maybe we'll switch tracks a little bit to this question. We were talking about it, right? How do you IFC's mandate, at least as I articulate it, is to do well, which is the returns, while doing good as well, especially focused on the developing world. And towards that extent, there's a question, again, anonymous attendee. How do you reconcile the patience required to create development impact with the speed and return expectations of VC? Right. So
Yeah,
I think
great
that's very
question.
well put. Yeah,
Right.
very well put.
It's a great question, and it's important to clarify because a lot of people sometimes will assume that when we make investments, it's purely for developmental reasons and we don't care about returns. And the reality is actually the opposite, in the sense that when we invest in a company, we do it primarily because of the returns and the impact. So we have to satisfy both requirements. And so we can't do a project that's purely developmental without any returns, and vice versa. We can't do an investment where it can generate significant returns, but has a poor developmental impact. So all projects, when we go to our investment committee, have a rating, or at least a justification. One is financial, and one is the non-financial additionality or the impact. So there is what I talked about: how many jobs are created? Does this really go toward addressing the access gap in healthcare, the quality gap? And we get rated. Every project gets a rating, and if it doesn't meet the minimum rating for the impact, there's often scrutiny on those types of projects. So we believe ultimately sustainable investments that make impact have to generate returns. But to be fair to the person who asked the question, would we expect Silicon Valley 50% IRR returns because you can flip the company in 6 months? No, right? So we do sort of approach it with a sensible reality of the challenges that can come in emerging markets. But every investment we make is something that has gone through investment committee and sort of justified the returns, and we weigh the risk, and because we have to be stewards of the capital that's being entrusted to us to make sure that we generate returns.
And I would just extend the question to Treasa. And Treasa, since you've done impact investing outside of IFC as well, in India, in the South Asia region, like, do you see and maybe this is a difficult question, but is there a return compromise that one has to kind of accept if one is going down this two-pronged return plus development strategy, as opposed to a pure play, I will sell whatever it takes to generate return kind of strategy.
Yeah, I think the, easiest way to think about it is that, development impact is an additional filter, right, over commercial return. So,
Okay.
I've seen being, and, in my earlier roles as well, right, because that work, funds something else in a more difficult market, or, in my earlier role, the profits used to finance the non-profit work, and so that's how a lot of impact investors think about it. So yes, development impact is additional filter over commercial return. So we will not pursue things that will only produce commercial return. uh, it is not sustainable to change. I mean, there can be no development impact without a sustainable return in equity investing, right? And
Yeah.
we are on our side of the house, we are equity investors. So that's how we think about it. I think we take maybe, I mean, because we are proprietary long-term capital, we have the luxury of staying invested for slightly longer than funds which operate with fixed lives. So in companies like Nephroplus, for example, we've been investors for over 10 years. So in that way, this type of capital is probably more suited for businesses that have a longer gestation. So we're here to play the long game, but clearly, as Mohammed explained as well, it's we need both for this to work sustainably.
Got it. No, I think it's well put as a filter, right? Sorry, Mohammed, go ahead, please.
No, if you just going to say the other thing to clarify is, obviously our mandate is to support all emerging market countries. Some of those, have challenging or sort of nascent VC ecosystems, right, which are
Hmm.
very, very challenging. So we don't sort of sit and say, well, let us wait until some of the smaller, let's say, countries in Africa, for example. We'll just wait until VC magically appears there, right? We have to be much more proactive there. So we do have now the luxury of the wider toolkits that we have because we're part of the World Bank. So there are instruments that help us invest in these markets, but de-risk our equity. So we have something called blended finance. So
Hmm.
we look at things like that to help us invest and sort of have a downside protection on our capital. And those sort of investments are done a little bit more skewed toward developmental because our return expectations there are very different because of the nascency of those ecosystems and because we have to play the initial role of heavy lifting to sort of create those ecosystems. And so again, there's where we can bring the whole power of the One World Bank group, where we bring private sector, public sector, our equity investment, and then we mobilize other kind of like-minded investors, whether they're DFIs or strategics, who say, listen, I want to commit capital for a specific use to help create a thriving VC and startup community in these countries. And that's the long game that also Treasa was mentioning, but it's done as a sort of under a different category of equity and returns expectations as compared to sort of pure VC, where we can do that in India and have the comfort. There's an IPO market, there's a thriving tech ecosystem, and that's fine for these types of countries. But for the others, we have to play a different role.
Very interesting. I think it's yeah, the expectation you set as you go into a market, which is interesting. As we get to the tail end of the discussion and time has flown, I think I will have to address the why CARPL and what CARPL question. We have a couple of those coming in. Maybe I'll address this one to you, Monique, and I promise you I did not plant this. Um, can't say that for my team though. But when when you first encountered CARPL, what did the company understand about healthcare AI adoption that you felt the broader market was still missing? And I address this to you, Monique, because as I look at you as a student of the healthcare, of the digital health AI ecosystem globally, right? So yeah, do you think we understood something that the market was missing? And if so, what?
Yeah, and maybe I'll put it into the context. I mean, we have spent a lot of time and met a lot of companies that are uh, building solutions in AI and health. Some of them, just pure AI. Some of it is applications. Some of it is just is companies sort of using and building in house. So we've spent a lot of time looking at that, and with the fundamental understanding of where we see some of these solutions fitting to bring a benefit to solving key gaps and critical gaps that we're seeing in healthcare, like the challenges around the shortage of radiologists is real. We often have seen equipment that sits there fairly idle. You might have an X-ray in place, but it's just not being used at its, not even at its capacity, maybe a few hours a day, because you just don't have a radiologist, and that's a huge problem. I mean, so many folks are just not getting even basic diagnostics that they need for basic care. So it's a fundamental problem that we do see. I think that was sort of the context of us of looking at this space. And I think one thing we really appreciated about CARPL was you do have a very fundamental and deep understanding of what is the challenge in the ecosystem. What are you trying to solve? Where are the gaps? And I think we heard this as we talked to also some of your customers across different geographies, and how your solution is really trying to build and solve that problem for them, and your willingness to work with them, to even adapt and adjust the model as you start sort of building it out to serve their needs. So I think that we really did fundamentally appreciate how deeply you understand this market, this ecosystem, and how you're kind of building to solve that problem, solving towards that.
It's difficult to have a straight face while I listen to that, but yeah. No, and I think an extension of the question is to you, Treasa, from another anonymous attendee. It says that CARPL is a India-built company serving healthcare systems globally. If at all you were convinced, what convinced you that it could become a global category leader than simply a successful company from India? So I think, what gave you the confidence that, we could actually go global and not be localized to one region?
Right. I think it was the first time I heard Vidur pitch at, I think, the Stellaris annual event. He had just got off a flight, from somewhere. And, I think that, and I remember his statement that there's a reason that Air India exists, so that we can travel all over the world and, sell our platform. So clearly, I think the problem is global, and IFC's raison d'etre is really to take innovations from one emerging market to another. I think Vidur had the vision and the energy. I think there were already, marquee customers globally that, were your customers. And then, of course, I think there was, I think from a distribution perspective, what gave us a lot of confidence was also the PAX partnerships that you all had struck, because there are only so many flights that Vidur can take. So it was
Thank you.
to see, how you had, partnered with the PAX companies as as a force multiplier in your distribution strategy. So I think all of that convinced us that this is the problem is global, is a world-class platform, and there is a strategy to, for a global GTM.
Nice. No, thank you. I really don't know how to follow that up. Mohamed, any nice words from your side? I don't even know what to say.
I think I'll say it this way. Look, the mission is important. The problem that you're addressing is huge. Obviously, we evaluated you and think highly of the management team, but like all startups in the sector, it's an execution play, right? So we really entrust you and the team to really deliver on the mission, and we'll of course will support. But I think for me, you have the right approach and framework for the healthcare sector. Like, as I mentioned, this is not a content creation tool. You're solving the trust gap and the compliance gap for the sort of explosion of AI models. And so that, chaos with what a healthcare professional looks for in terms of what they need from a model. So you play a very critical integration game. And if you deliver the right way, you will then earn that trust of the sector, which would then embed you in a very long-term, durable way with the sector. And I think I think you have the potential to really build a strategic sort of positioning within the ecosystem. And this company can then evolve and grow and develop new products and services and so forth. So the fact that you actually care about this sector and approaching it the right way is very important for us.
Thank you. Thank you so much. I think we'll come back to the questions. We have a question from Aditya. Aditya is part of our compliance team and regulation team. So he asks, beyond financing private providers, in what ways does IFC shape or help in designing public health policies in emerging markets? So the government side of things, I guess.
That's from.
Yeah, as I was mentioning, we have a group within the World Bank group called the Knowledge Bank, and that Knowledge Bank really brings together expertise across public and private, with the objective of trying to sort of ensure that we're not kind of missing areas that would be the gap. Especially I think along the regulatory side, contracting is an important piece. All these pieces that where it's really important to have not only public sector, but you also have a lot of private sector actors that are key parts of that ecosystem, and ensuring that you're having the right frameworks, alignments across those. So I think one of our, so as an institution, we are working closely with our colleagues that do have that public sector facing, to ensure that you have like fair, transparent. You're creating. I think Mohamed said it earlier. You're creating like a level playing field so that everyone knows the rules of the road. There are rules to the road. It's not, without rules. I think having gray or no rules sometimes is from a patient perspective certainly isn't great. But you have, the rules of the road, and I think that's where, at least from our side on the IFC side, we want to make sure that the private sector perspective is taken into account in that. But working with our public sector colleagues to make sure that we are building and addressing some of these areas that are really relevant across the entire healthcare ecosystem, not just public or private.
That's amazing, right? Because like you guys are the private sector, then there's the public sector, and these guys are obviously closer to the government, and because you work together, there is that sphere of influence that happens. I do want to get to this one last question. It's a pretty interesting one from Arjun, who's again part of my team. He asks, venture investors have unusual influence over which ideas and founders get the chance to scale, right? Like you do shape the future of the world, as Mohamed, you'd said, you do get the money into the hands of the doctors so that then they can, deliver that treatment. When you look back on your careers, what legacy do you hope your investment decisions will have created? I think it's a very interesting philosophical question. So yeah, we'll start with you, Mohamed, and maybe go around the room quickly on this. And it's a good question to end on, I think.
It's I think for me, it's the relationship with founders. If you're building a relationship with people at the end of the day, and they're very gifted, very smart people. To me, it's less about, honestly, yes, it's important for me that the investments make sense and are profitable, but it's less the financial outcomes and more the team development, people aspect of, do you have a set of founders who, if the next time they wanted to start a company, would they call you? I actually think that we're less on the side of we shape the innovations to come. I think the founders are the ones who shape the innovations, and what we're sort of investors who are there to help them fulfill their dreams and ambitions. But the innovations come from them. The impact
I think
comes from
Mohammed,
them.
just to this is me, paraphrasing the
Yeah.
question. I think it's more, let's say you have, three options to invest in, right? And you invest
Yeah.
in one of them, right? You are kind of shaping the future through that pathway
No
as
doubt.
opposed to the other two, right? Like,
Yeah, I mean, no idea
yeah,
is going to work without capital, right? So we
yeah,
definitely have a role to play, and that decision definitely will decide which gets funded or which doesn't. But this, to answer
it's
your
the people.
question, it's the people that the relationship you've built along the way, because there's nothing more fulfilling than a founder calling you and saying, "Hey, you backed me before. I'm starting a new company. I'd love to have you participate," and we build that partnership going forward. That to me is the number one thing.
Wow, nice. Monique, what is the legacy you hope your investment decisions create?
I mean, I think there's two parts. I mean, obviously, I mean, from from the investment perspective, you hope that they're successful, and success for us isn't just about the the financial returns. It is really also about the impact side, that they really have built a sustainable business that is delivering better healthcare. I mean, I think that's fundamentally that's what you hope, and we definitely have seen that kind of success. And it's really when you I sit on a board of a few companies, and just over that time you see them grow, and you have the patients who come and talk to you and say, this has been our experience. That's you feel like you've been part of something, and you're built helping that founder and that company build towards that ultimately, which is why we've invested in that company, right? But I agree with Mohamed on a personal level. It is really about building these relationships and supporting these entrepreneurs. And when when a company or a founder comes back to you as they've moved on to the next business and said, "Hey, I'm starting this. Can we have a quick chat? I'd love to know what you think." You're like, "Okay, I've really." It's nice to know that you've helped contribute to their thought process along the way, and that's it's great to it's great. It's a great moment when you have that happen.
Nice. And last and certainly not the least, Treasa.
Yeah, for me, I think I've had the privilege of, being part of some of the early journeys of, companies, particularly in the consumer internet and financial inclusion spaces that have fundamentally altered, the rules of the game, have been quite path-breaking in terms of, their impact on the customers. I was an early investor in a company called BigBasket.com, which was, the first online grocery company in India. I mean, back at a time when I still remember the pitch, and the first reaction in the room was, who's going to buy grocery online, right? And now it's second nature for all of us. So I've really had the privilege of, and likewise in financial inclusion, have had the privilege of backing a bunch of companies which massively expanded reach, innovated on products, fundamentally also force the incumbents to innovate. So that's what's that's consumer and financial inclusion are spaces where we've seen those successes. Healthcare is a space that I've been investing for the last almost over 10 years, but haven't seen a very large successful outcome yet. And that's the bet here, Vidur. No pressure.
No, fantastic guys. We are at time, and I could keep going and going, but thank you so much. From the heart, thank you to everybody who joined. And yeah, we'll be doing this every other Thursday. And yeah, hope to see you guys on the next one. Thank you so much.
Thank you,
Thank you.
Vidur.
Thanks a lot,
Bye. Bye.
Thank
Vidur.
Thank
you.
you.
Bye bye.
Bye. Bye, guys.